Hello there. Well, we all know how important inflation is at the moment. It's really driving everything. The main reason that markets, whether that's equities or bonds, have fallen this year has been higher levels of inflation, leading to expectations of higher interest rates and a slowing economy. So it's probably quite shocking when you see the latest inflation figures here in the UK showing CPI at over 11% over the last 12 months. But actually underlying it, we think there are some grounds for optimism, and that might be the peak of inflation from here. Don't forget that inflation figure is based on what happened to October, and October was when the price cap on energy bills increased again. But we know that it's not going to increase anymore for another 6 months. The government has intervened and guaranteed that our energy bills won't get any higher for that period. After that, there will still be a price cap, and it's going to be a slightly higher level, and there'll be maybe more targeted support for lower income households. So that's one reason to think that inflation may be close to the peak. But also, if we look at some of the underlying drivers of inflation, we're starting to see maybe a change in trends. If we look at energy prices, as I said, that's accounts for a really high proportion of the inflation figure. But if we look at underlying wholesale gas prices, for example, they've started to fall. They've fallen quite a long way from where they were in the summer, and we don't know what's going to happen to them from here. But if that carries on, then those inflationary pressures should ease. We've seen something similar in some of the food prices that are also causing prices on supermarket shelves to increase. Some of the underlying wholesale prices of things like wheat and milk have just started to come back off again. And that will take some time to feed through into the prices that we see on the shelves or we see in our bills. But it's good news, and it does mean that some of those pressures are starting to ease. If that continues, then it means there's less pressure on the Bank of England or other central banks around the world to keep putting interest rates up. And we think if we start to see a few more positive bits of news about inflation, it's possible that could be the catalyst for those equities and bonds that have fallen so far to rally. In fact, we saw some evidence that that might be the case in the last couple of weeks when the US inflation figures came out at less than what everybody was expecting. Still pretty high levels. I think they're about 7.7% per annum, but people were expecting 8% per annum. So they came out less than people were expecting, and we saw a very sharp rally in equities and bonds over the next couple of days. So we want to see a bit more evidence like that. But if we do, then perhaps it might be the case that if inflation carries on easing, then we might see the economic downturn perhaps be not as bad as some people had thought. Interest rates don't need to go up as much as some people had thought, and hopefully that would be a positive for investments. So some positive things going on kind of under the bonnet. Let's see if that continues and if that eventually then feeds through into those headline inflation figures. Thank you very much. See you again next time.